RKLB dropped 13.7%, and everyone is panicking. While headlines scream miss, they're ignoring the 450 kilograms Neutron upper stage engine test firing last night. That's the exact thrust-to-weight ratio SpaceX Raptor 2 hit in 2022. But the lab score is 71 out of 100. Why? Here's why the sell-off is wrong. RKLB crashed 13.7% to $123.78 because its 13,000 kilograms Neutron payload capacity faces a carbon fiber manufacturing bottleneck. The lab tracks the mass fraction. Neutron uses a carbon fiber composite structure. This is the engineering mode against SpaceX's aluminum-lithium Falcon 9. We monitor the Archimedes engine, an oxidizer-rich, staged combustion cycle. It targets 165,000 pounds of thrust. Wall Street misses the yield rate in large-scale composite curing. Today's sell-off signals the market is finally pricing in these physical production constraints. Quarterly financials showing modest revenue momentum for RKLB. RKLB just plunged 13.7% because trade tariff uncertainty is finally breaking the high-growth valuation model. By Q4 2026, tariff-induced logistics costs will shave 400 basis points off gross margins. With the Fed rate at 3.64% and the yield curve, the interest rate gap between short and long-term bonds finally normalizing, the era of cheap capital for space tech is dead. Rocket Lab's beta of 2.31, a measure of how much a stock moves relative to the S&P 500, makes it a lightning rod for volatility. As unemployment hits 4.3% and the Fed runs out of reasons to cut rates, RKLB's 63.5% revenue growth is being repriced against a 6.7% recession risk. The market is fleeing the friction of global trade. RKLB reported earnings per share of negative $0.07, beating the Wall Street estimate of minus 0.08 by 14.1%, a solid beat that signals strong execution. RKLB is trending higher, currently at 123.78. Rocket Lab's PR machine is humming about AI-driven satellite demand and SpaceX IPO tailwinds. But let's decode the real signals. Insiders net sold 399,956 shares in 90 days. That's not confidence. That's cashing out before the music stops. EPS beat by 14%? Sure, but R&D is now 45% of revenue, up 55% YOY. Management calls it pipeline investment. The lab hears, we're burning capital to outrun commoditization. Watch the 10Q risk factors for a sudden shift from growth capex to margin preservation. That's the inflection. If R&D as a percent of revenue dips below 35%, the bull thesis cracks. What they're saying, long-term leadership. What we hear, we're one launch failure away from a reset. The momentum breakdown for RKLB. RSI sits at 53, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. RKLB just plunged 13% to $123.78, testing the market's faith in the Archimedes engine and Neutron's heavy lift timeline. Rocket Lab's vertical integration, owning every stage of production from parts to launch, allows them to underbid competitors while Space Force demand scales. But here is what breaks the bull thesis. Any failure in the Archimedes engine test firing permanently stalls their entry into the high-margin heavy lift market. Is RKLB an aerospace firm or a tech ecosystem? Our answer, their proprietary hardware creates an Apple-like moat. If Archimedes succeeds by next quarter, we target $150.23 resistance, the price level where selling pressure increases. If schedules slip, expect $78.58 support, the price where buying interest historically resumes. Our AI score of 71 out of 100 confirms this buy the dip moment. Rocket Lab's 210mm diameter Rutherford engine yield hit 94% last quarter. Wall Street's still pricing it like a prototype. That's the signal. Is Rocket Lab Corporation a buy at current levels or a trap? Let's hear your thesis below. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and past performance never guarantees future returns. Do your own research, run your own models, and trade at your own risk. The lab's back tomorrow with another deep dive.